Welcome back, everybody. Now let's take a look at the gold market. Here's Sive Morten with the Forex Peace Army.com. Daily update on the gold. Well, as usual, on the weekend we have prepared fundamental report when we covered two other subjects as add-on to recent discussion that we have taken in the Forex report with the tariffs, and we explain all the background why actually we think that Donald Trump sooner rather than later will cancel this policy, and we have explained it by real facts. And actually I think that you now have no concern. You see all really negative facts from that, and you know what to watch for once you will take a look at the news and statistics that will be published on the tariff gathering. So another topic today is actually some news. Of course, we have considered some forecasts on the gold price, briefly touch the topic of the Trump power assignments, but this is actually not very important. The one thing that's becoming really interesting is that a lot of important events that we think will have the decisive meaning for the gold market somehow will be ignored by the big media. So, for instance, briefly have been mentioned that actually Shanghai Gold Exchange started gold trading in Chinese yuan, and now they provide the ability to exchange. Any country who would like to do this, that have the positive surplus with the trading with the China, yuan on the gold, without ignoring the actually big markets in the United States and in London. So this is big part, as we suggest, this is big part of the Chinese strategy and in general of the BRICS countries who are trying to start inner transactions without United States dollar and using the gold as some kind of the background for that. It's not clear yet how it will be, but there have been made a lot of steps in this direction. But somehow media ignored it, and we have paid attention to this subject this time, which actually brings lots of interesting results, and why actually China start doing this, although they have really big debt in a row with the United States, but they actually now have no options, and they will have to do this based on the policy that's introduced by the Donald Trump. So all this stuff you could read in the report. Link will be down below in the description to this video, so I will not pay attention too much to this in the video. Now let's turn to practice and the trading process with the gold on common week, what actually we intend to do here. So as we discussed last time, we mentioned 3330 area as potentially interesting where something could happen. Yes, overall week was not very impressive from the bullish point of view, right? So on the weekly chart you even could recognize a kind of the shooting star, and if our plan will not work here from the 3330, I will not be surprised too much if we'll see drop back down to the 3250 area, where stands the support of the weekly chart and weekly oversold. That really could happen. But still, currently it's not the fact yet, so maybe everything will go well, and actually that's what we intend to do. Market right now stands in our important daily support, which is actually, I will just contract the chart to remind you where we stand. So we're talking about the big butterfly that potentially could lead market to the 36 area. Market is not at every bot, and here market stands at support of the trend line. And we said that the first area that probably makes sense to keep an eye on is 3330, where we potentially could get the bullish grabber. And we have got it. So on Friday, it has been formed. It also is confirmed by the futures chart. So if you take a look at October futures on the gold, you will see also, and actually on July futures as well, although they are almost over. So we have the grabber here. That's the great. So because this pattern, as you know, was actually a big part and is a big part of our plan. Now on the fall time frame chart, we also have support of this trend line, although it has been penetrated briefly here on Friday, and market stands in some support cluster of the Fib levels. Initially, it was 33.40, 33.60 as a confluence. Market remains around 33.40 and 33.20. It's next major 618 support. So in general, we could say that an area between 33.20 and 33.40 is a support where market has formed a grabber. So, but at the same time, you could see the big sell-off here, and you do not want to take position just because this is support and we've got the grabber. It would be better to get some signs of the reversal on lower time frames, at least on Monday. That's particularly what we intend to do currently. So personally, I feel some lack of the context for immediate taking of the position here. Besides, on the 4 time frame chart, we could get something different. It isn't involved in our plan with the grabber, but it also might be a really interesting trade. So you can see on the 4 time frame chart, we have great downside thrust. And any pullback here, some retracement, it might be not only the part of the big reversal, which is actually we're hoping on, but it also might be kind of the bread and butter sell, for example. Separate trade, very short term, but it's also, well, I don't think that we should ignore it. So if we'll get it, it might be a really great scalp intraday trade with a minor pullback and then deep retracement that we usually do in such circumstances. That's what we have on the 4 time frame chart. Meantime, if you take a look at the 30-minute chart and the hourly chart, another reason why I'm not really inspiring with the immediate position taken is the performance first with the butterflies. You can see market even dropped below the 1618 extension. So in fact, we could say that this minor butterfly has failed. And usually failure of the butterfly is a serious pattern. Butterfly is very rare fail. And if it happens, it is Kevin Riordan talked. This is one of the Genopoly experts. He said that if butterfly fails, it usually fails miserably. So it really happens very often. So when market breaks it, it could go significantly lower if it shows no reaction on the butterfly. Here was minor reaction, but it was too small. And another reason is that currently market actually stands too close to invalidation point of the grabber without any bullish signs. So here is indeed we have the invalidation point of the grabber and market stands too close. I would prefer to see some reaction. Yes, maybe later I will take position at a bit worse price, but if I see great bullish patterns, that will be much better situation. The only thing that you theoretically could suggest on this minor chart is that maybe we could get some kind of, I don't know, some minor hand shorts, very short, some small hand shorts on 15-minute chart, on the 30-minute chart, right? So it will be some shoulder head maybe, but it's just for information. I don't know. So I think that it's too small to rely on it. Maybe it will give you some ideas. So that's probably all for now. Situation stands ready for a possible reaction, but we do not see yet any signs of this reaction. That's what we actually would like to wait for. If we will get it, then we turn immediately to the practice steps, discussing position taking and so on. But maybe it will take for one, I hope just Monday will be enough, but maybe Monday, Tuesday morning we will come to some conclusion. So that's all for now. Take care. See you next time.